Hooty hoo, all my stock market gamblers. Welcome today. It's Monday, April 26th. Today we got the stock market drifting higher. We're very close to record highs. But there's a few things I want to talk about today. I want to talk about if the stock market is in a bubble. I believe it is. I believe these record highs are actually kind of dangerous. Why? Let's take a look at the SPY. Look at the chart. All right, last 6 months, we've been going straight up. Okay, now, the fact that we're at a record high here, which we are, we'll hit a new record today, is good. The market's up, right? Everybody's happy. But here's the thing. We're at a record high on the SPY, but we're also at a record high on margin debt. What is margin debt? Well, it's debt that you borrow money to buy the stocks, okay? So margin debt hit a record high last month. Hit a record high of $822 billion. Now, this is, to give you an perspective, about a year ago, the margin debt was below $500 billion. We're at $822 billion. So what are people doing? Well, they're borrowing money to buy an asset that is very expensive, an asset that is at a record high. Now, this leads to a financial problem. It's called a crash. This is what leads to creating the bubble, but it also leads to the downfall of the bubble. It leads to the crash. When the market starts to crash, they get what's called a margin call. And they say, you have to sell your stocks or we will sell your stocks for you. You don't have enough money in your account. You get a margin call. And margin is at a record high. People are buying and buying more and more, borrowing money to buy more and more. We're printing money to buy more and more. The stimulus checks come out and they find their way into the stock market. So it makes me a little nervous up here. Now, there's two things I don't like to bet against. I don't like to bet against the trend. You can see this trend is going straight up. Okay, the trend is up. Now, you know that the Federal Reserve, they've been printing money. More. I don't like to bet against the Fed, and I don't like to bet against the trend, but I am going to tell you this is not going to end well. It's not going to end well. Okay, so why do I think this is not going to end well? Well, look at this 200-day moving average down here. This 200-day, it's been over a year since we've touched the 200-day. The 200-day on the SPY is $360, and we're at $418. That's about, 17% above the 200-day. Now, my prediction, I don't know. Timing the market is very difficult. You get these YouTube people. I love it. Market's going to crash this week. Market's going to crash next month. Market's going to go up next month. They have the timing down. Timing is very difficult to do. Now, I can tell you the trend is up, so we'll probably move a little bit higher from here. But I'll also tell you, here's my timing. I predict, if you want a market prediction, now this is just what I believe. It may not be what you believe. But I predict we're going to touch this 200-day moving average down here for about that'd be at least a 20% correction. And I believe we're going to touch that sometime this summer. All right, so sometime between May and October. Now, that's a 6-month window. Oh, Mike, you're a genius. Well, I'm just telling you, I'm just putting it out there as a warning that we will come down and touch the 200-day moving average in the next 6 months. That's my prediction. Now, maybe they can just keep this going on forever, keep the party going on forever, but it's not good when things continue to go up and up and up. Why? Well, because when they do that, they're putting too much financial pressure on the system to keep adding money, to keep borrowing money and buying the stocks, to keep the stocks moving higher. At some point it breaks, and at some point it breaks really hard. Now you'll notice here on the RSI, we're up at the very top here. That means we're getting close to a top. You'll notice here though, this is interesting. The MACD is starting to come down a little bit. Even though we're at a record high, you'll notice how the black line and the red line are starting to go the other way. Now here's what else I noticed. Notice how we're up today. We're up, okay, it's $1.35 on the SPY. So the markets are higher today, right? Okay, so we come down here to the VIX. Now what do we got on the VIX? The VIX is also higher today, about 40 cents up, trading at 1775. Now that you can tell the VIX is really low here. The VIX is way low. Now if you look at the options on the VIX, just pull up the option chain for the VIX. You'll notice if you go out to June, July, and August, the summer months, it's trading 1775. So look at an $18 strike price. Okay, so you go to June, the $18 strike price for the calls are trading at $6, but the same $18 strike price for the puts, it's only about 60 cents, 10 times higher for the calls, meaning there's a lot of expectation that the VIX is going to spike up. It's going to spike up. You see these spikes? When these spikes happen, the market goes down. So there is big expectation for the VIX to spike upward to the 200-day and beyond the 200-day. Out in July, out in August, out in September, the summer months, they're expecting much higher VIX. Okay, so that means when the VIX spikes up, the SPY is going to come in. That is why I think the SPY will come down to this 200-day moving average. Now, it may just be a correction. Corrections are 20% or less. It only has to drop 17% to get here, and it may bounce right off again and goes to the races. That will be determined at that time. But I do believe we're overdue for a correction coming down here to touch the 200-day moving average. Just my opinion. Just my opinion. Now, what I also want to talk today about is silver. Okay, so am I putting my money into the SPY? Up here, it makes me nervous putting my money in the SPY. Am I putting my money in silver? Absolutely, I'm putting my money in silver. Why? What's the difference? Well, silver's at SLV's here at 24. Now, if you go back to 1980, SLV was up here at 50. 50, all right. Now, actually, I don't even know if the SLV was around in 1980. Probably was not. But silver was at 50, and now it's down here at paper silver's at $24. This is cheap. People are not using debt to buy silver right now. They don't believe in silver. They think it's dead. They think it's flat. Okay, a lot of people are stacking silver. I stack silver. I do not use any debt to stack silver. I own it. It's physical. I hold it. Okay, so not a lot of debt going on in the silver market. Silver market is in uptrend. It may not look like an uptrend because it's been coming down. But look at the 200-day moving average. Still moving up, and we did break below it right here, and when we broke below it, that was an opportunity. I jumped in, I bought it, and now we've moved back above it, and we're still in an uptrend in my opinion. I think we will trend higher. I think we'll take out this $28 high. We're at 24 right now. I think we'll take out the $28 high, and I think we'll continue to move upward to the $50 level. Now, that's my opinion, and that's what I'm buying. That's where I'm putting my money. The other place I'm putting my money is in the miners. The miners. Now, this is a weekly chart on the miners. Now, you'll notice back here a year ago with the big meltdown in stocks, and the miners melted down here and got down to 17, and we're back up at 35. Okay, maybe we're going to get a pullback. I'm hoping. Would love a pullback in the miners. Miners are a buy at this level, though. We were at 45. We're down here at 35. They're on sale right now. Now, could they come down here to 25, 26, 27? Sure they could. Of course they could. Will they? I don't think so. I'm a buyer here. Once again, there's not a lot of leverage in the miners. There's just not. People are not borrowing money to buy the miners. They're borrowing money to buy stocks, to put it in the stock market. I think SLV is a great play. I think GDX is a great play. Now these are, once again, these are paper assets. I like to stack physical silver, but this is just what I'm doing. I believe that the silver market is poised for a major move, and I think that major move is going to come within the next couple of months. I believe that. I could be wrong. It's what I think. I think that silver and the miners will be heading higher. Now the SPY in an uptrend, I'm not saying to short it, it's in an uptrend and they're borrowing a lot of money for it and the Fed's going to print a lot of money, so that uptrend could continue, but it makes me nervous. It just makes me nervous. I got a gut feeling that the SPY is going to come in at some point, not yet maybe, but at some point over the summer months we're going to see that SPY come down, and I think we're going to see the silver market take actually what I would call a quantum leap higher. We may see silver double in the next, I don't know, next 6 months. Maybe we're going to hit that $50 record high. And this time I think that $50 will just be a stopping place for silver. I think it will break right through it and continue upward in the $100 direction. Now, I know that a lot of people are saying that's crazy. You got Bitcoin out there. Bitcoin did recover today, up about $3,000. Bitcoin making a recovery. I still think that Bitcoin's not out of the woods. I think that it's had a nice bounce here, but I think that there's still downward momentum in Bitcoin. A lot of people are nervous that governments are going to ban it. A lot of people are nervous about it, so there's a selling pressure going on. It took a drop from 65 down to 49, and now we're back to 53. 53, very high number, but could it come down lower than that 49? Yeah, I think it will. I think it will come down lower. Okay, it may rally right up to 100,000. I do think it'll get to 100,000. But not yet. I think you got to be patient here to find an entry point for Bitcoin. But I think a good entry point for silver is right now at this 24.21 on the SLV. That's all I really got for you today. I'm Tall Mike. Get out there, do some trading, and have a happy Monday, everybody. Bye-bye now.